Hello guys, for today's video I will be explaining everything that has been happening with Facebook lately. We'll also analyze their last quarter report, give you my expectations on how all this could affect their company's revenue in the near future, and we'll also give you an update on my position. I was planning on doing a video about pharmaceutical stocks today like Innovo, but decided to postpone it to Thursday since I'm a Facebook shareholder and thought that it might be important for me to share my opinion on everything that is being happening. So if you have any pharmaceutical company recommendation other than Innovo that you would like me to include in that video, let me know in the comment section below. Also, last video I announced that I was going to open a Discord chat completely free, so if you are interested in that, the link is down below the like button and above the 2 WeBull stocks, which you can get by signing in with the link and depositing $100. Okay, last week alone, Facebook stock went from all-time high at $242 down almost 10% to $216. On Friday alone, it dropped more than 7%. So why did this happen? A lot of reasons. It all started when Facebook decided to leave up a post from the president where he said that when looting starts, the shooting starts. After that, companies that use Facebook to advertise their products decided to start an advertising boycott in July to put pressure on Facebook to root out any hate and misinformation by any user, not only the president or world leaders. I do have to say that this boycott has quickly grown larger than ever before. This exact thing happened in 2017 to YouTube, which is owned by Alphabet. Several companies such as Procter & Gamble decided to pull their spendings after they found their ads running alongside extremist and racist content on the site. That pullback did not make any major dent in the company's finances. Still, advertisers explained that that boycott did make Google to work more aggressively in their content policies. This time, marketers are saying that they need movement and action right away. Maybe it's time for Mark Zuckerberg to start listening to what people want and move faster and make serious move about it. He already came out on Friday and said on a post that he already committed to review their policies ahead of the 2020 election. We do have to take into consideration that the 2020 elections were already causing a problem for Facebook because of what happened last time, way before any pandemic or racial justice protest. I will link Mark Zuckerberg post down below in the description if you would like to read what changes they decided to make in their policies, and let me know in the comment section below what you think about this. We also have to take into consideration that we are going through an economic uncertainty due to the pandemic, and a lot of companies were already managing their ad budgets way before this boycott. Now, the important question is, where is the money going now? Are these companies going to increase their ad budgeting in other companies like Snap, TikTok, or Google, or will just come back to Facebook when everything ends? I do not think these companies will completely walk away from Facebook. No one stopped permanently their advertisements. They just suspended it for a month of July. Companies like Adidas, Ben & Jerry's, Chipotle, Coca-Cola, they suspended only July. But companies like Clorox and Unilever decided to suspend their ad spend until the end of 2020. Anyway, a lot of those companies decided to stop advertising for a month or more because of everything that I explained. Again, I do not see all these companies not coming back to advertise on Facebook. Instagram and Facebook is the top 1 social media platform people use right now. Not everything is bad news for Facebook. They have been talking with a company called Jio Platforms in India to invest $5.7 billion for almost 10% stake. This company is the top Indian Telecom Network, which according to Facebook, this deal is pro-competitive, beneficial for consumers, and 60 million small businesses since it takes forward the vision of digital in India. Now, this deal will also benefit Facebook by being able to diversify and expand its reach in India, since they already reached 350 million users with Facebook and 400 million users with WhatsApp. I think this is a huge deal for Facebook since India is a market that huge companies like Amazon, Facebook, Google would like to enter. Also, even though TikTok numbers in India might have worried a lot Facebook, since according to App Annie, India accounted for 44% of TikTok users in 2019. But TikTok just got banned as well as other 59 Chinese apps in India. Another huge thing for Facebook is that they announced this month that they recently partnered up with Visa to launch a new WhatsApp payment platform in Brazil. It will be easy to use since it will be linked to your Visa or MasterCard credit and debit card, and you will only need a 6-pin digit or a fingerprint to complete any transaction. This is something very important for the company, but it's also important to know that WhatsApp has already been testing these payment services in India since 2018, but Facebook remains stuck in a regulatory maze there, and Google and Walmart were able to surpass them and establish dominance. This will definitely be amazing for Facebook because now they will be able to expand worldwide and diversify their revenue even more, which is something that they need to do since most of it comes from advertising. If we check their last quarter results, we can see that they had a total revenue of $17.74 billion and $17.4 billion were only from advertising, meaning that 98.3% of the revenue comes from advertising. Yes, this is a huge company that has been doing very well in the last few years, but I think it is time to diversify a little bit more and not depend only on other companies advertising on your platforms. That is why I think that WhatsApp payment in Brazil would help them grow a lot, since if everything goes well down there, they will start entering other markets. Now, I am really looking forward to their Q2 earnings report to see how this pandemic has affected them, and then Q3 to see if the boycott affected a lot. I do have to say that I do think the boycott will affect their revenue since they are going through a lot right now, not only with elections coming, the Black Lives Matter movement, the boycott, and the pandemic. This is the bad thing, that everything happened together, and a lot of companies were already reducing their costs due to the pandemic, and obviously marketing is not very important for a company when they are struggling with things like payroll. Now, their net income increased 50.45% in a year. Obviously, I do not expect that kind of growth for Q2 because of the pandemic, but it is important to know that the company is still growing very fast. Their daily and monthly active users keep increasing year over year. Their free cash flow is also increasing at a very healthy rate year over year, and the thing that I like the most about this company is their balance sheet. Their cash and cash equivalents increased to $23.6 billion since December. That is almost 24% increase quarter over quarter. Their current ratio is impressive since if we divide their current assets of $69.35 billion by their current liabilities of 15.07, we get a current ratio of 4.6. 4.6. That is impressive. Their stockholders' equity is increasing, and it means that their assets are growing faster than their liabilities, which is something to look up for a company before investing in it. Analysts are expecting Facebook to have a slight increase of 1.90% in revenue for Q2 and 9.50% increase for the whole year 2020, which is obviously a very small increase in comparison to their usual year-over-year growth of 18 to 25%. They are also expecting an increase of 50.5% in earnings for Q2 and 17.5% for the whole year. I wanted to give you guys an update in my position since I added more in April. Now I have an average cost of $186.88 and a return of 18.79%. I bought back in April when the stock was at $170.60. I could have bought in March when it was between $140 and $150, but I do feel very comfortable and happy with my current position. Will I sell my stocks because of everything that's happening? No, definitely not. I love this company and I can see a huge growth ahead. I most likely add even more to my position if it goes below 200, and if it gets below $170, way better for me. They are significantly seeing an increase in users due to the virus. Their balance sheet is the best one ever. Their free cash flow is nice and healthy. Their deal with Visa in Brazil and with Jio Platforms in India is going to bring them a huge possibility to diversify even more their revenue. So I do not see this company falling and will not close my position at all. Obviously, I do recommend you guys do your due diligence because I am not a financial advisor. I'm just a girl investing in Robinhood and sharing it here on YouTube. What I can do for you guys is give you 2 free stocks if you sign in with my WeBull link down below in the description. Also, do not forget to subscribe, smash that like button for the YouTube algorithm since it really helped my channel out. Hope you really enjoyed the video. Thank you and see you next time.